Haverford Trust Chief Investment Officer Hank Smith is here. Hank, Matt Murray was talking about technology. Can other sectors pick up the slack?
Yeah, absolutely. First of all, Happy New Year, Dagan.
Sorry, I don't mean to gloss over that, but it's not so happy in the markets right now. Continue, Hank.
No, absolutely. Mark Twain was credited with this quote, history does not repeat, but it often rhymes. And I think today is quite analogous to where we were exactly 3 years ago when there were fears of a global recession, maybe even the U.S. going into a recession, China hard landing, oil collapsing to $26 a barrel, and the Fed on track for 4 rate hikes. And today we have something very, very similar going on. But we think the likelihood of a recession materializing in the U.S. is very, very small. And we think we're going to get stimulus from China. We don't think you're going to get 3 or 4 rate hikes this year, perhaps 1 or no rate hike. And the markets will adjust. And so we remain quite positive despite the year-end sell-off and the New Year sell-off that we're about to experience today.
Hank, it's Matt Murray. How much upside do you see for the consumer right now? I mean, there's a lot of thinking that one of the issues this year will be the U.S. consumer has to pick up more of the slack from the corporate sector, but that they're pretty well positioned to do it with wages coming up last year. Where do you see the consumer right now in the U.S.? What are the upside opportunities? What are the risks?
Well, look, the consumer is finally getting wage increases north of 3%. That's a good sign. They're also getting a tax cut via the decline in gas prices. Look, it's costing me under $50 to fill up my Tahoe. I haven't had that since 3 years ago. So those are positives. And, there's this notion that lower oil prices is a bad thing. I would like to counter that by saying that for most of the developed world that relies on oil, lower oil prices is actually a good thing, and it's particularly good for the consumer. So I think the consumer is in pretty good shape going into this year.
What about housing? Housing's the one area where it's been rockier for consumers, even going into last year as things were booming. Do you see that leveling off?
Right. That's the rise in mortgage rates and the pricing. Now, look, I think the consumer will adjust to mortgage rates, and look, mortgage rates are starting to come down a little bit. And this whole housing recovery for the past 10 years has been all about two steps forward, 1 step back. We're having a 1 step back now. And so I don't think housing is going to be as big of an issue this year as it has in 2018.
And I know we're going to talk about housing later on in the show, Hank, but it's Cheryl Casoni. You said something about stimulus from China. And I'm wondering why you say that and how much stimulus you could be looking for, because we're in the middle of a trade war with this country. And with the manufacturing activity that we saw falling, we've had 2 big reports from the Chinese. One of them, a government report saying that they've got PMI problems. I don't understand how much that stimulus is going to be and where it's going to come from the Chinese. Hank?
Excuse me. Look, don't underestimate what China can do. They can certainly do something on the fiscal side with taxes, and certainly continue the one road policy, the Silk Road policy, in terms of added construction and spending there. So I think China will stimulate. I think this slowdown is temporary there. And again, I see much of the same rhyming from 3 years ago, this market overreacting to a recession that will not materialize, and that's where we see opportunity in 2019.
Hank, real quick, biggest worry?
Look, policy mistakes is the biggest worry here. The Fed overstepping, And one more thing, if Trump digs his heels in with respect to these trade negotiations and does not get a resolution there, that will be a problem. But if he wants to be reelected, he will come to an agreement very soon, and that will provide some stimulus and take away a lot of the uncertainty that has been built in, and you see it in some of the CEO confidence indicators.
Yeah, manufacturers here in the United States are still waiting for those steel and aluminum tariffs to go away on our allies. They're still sitting around going, you're killing our business here. But they're still in place despite a new trade deal with Canada and Mexico. So, again, you want to talk about policy mistakes.
Yeah, absolutely. And that is his biggest lever in terms of stimulus, because he's not going to get any more tax cuts. There probably won't be any sequestration in spending, but it is on the trade side. If he can come to an agreement here, that it will be a good stimulus for 2019.
Hank Smith, thank you, sir. Great to see you, and a Happy New Year.